4th of October, end of the week review of the tank, MVR. Been a busy week with the new daily videos on the ninjas. People, you seem to be enjoying it. If that's all common, not common terminology for investing, we'll get to that. But essentially what we're going through today is the tank. He's the core holding of your portfolio for the next 10 years, and we'll get to all that stuff. And it all revolves around this theme here, the commodity cycle, back to the 1800s. So they don't come every now and then, but here we are here. So we got, well, they reckon till 2045, so there's a few more years to go. Now, this is a live data version of this, so this here is essentially this here. This is the Bloomberg Commodity Index. And we've got what we say in charting terms is a lovely cup and handle pattern, which is very bullish. And we're looking at monthly candles here. So you can see we're now starting to break. So that's a basket of commodities basically. And another major reason is this thing here, percentage of mining industry of global equities. So it's a pipsqueak. Obviously this is tech market cap, but over time I reckon resources are going to outperform tech, and we've started that and we'll get into that. Okay, so that's the theory. Now we get into it for those VAS VGS holders. So this is VAS doing nicely. This is VGS doing nicely, but I had all those guys with smiley faces on the thumbnails. The only two ETF combo you need. Well, you haven't seen this before. I like to use ratios. I'll just go back. So if we take the VGS and we divide it by the VAS chart, because that gives us a ratio to run with. Okay, we get this chart pattern. So basically, how much percent should you have allocated to VAS? Well, since 2015, 0. Because if you had have just invested in VGS and not VAS, you'd be 83% better off. But I know everyone's comfortable living with VAS and it makes you feel good, but just to let you know, that's what it is. Okay, so commodities, you can't go past commodities without looking at gold. It's the when he runs, he's rang the bell. We had a bit of a down week this week, but it's still, so he's signalled the commodities boom and has officially started, along with the bottom of that chart. So that looks fine. A ratio I like to look at is the gold over the S&P 500. Okay, so gold is forming a beautiful base, just the gold price, not the miners, to outperform the S&P 500, and that it will occur. Now this is gold in Aussie dollar terms. The other one was USD terms, which is the one you usually see. So this is our Aussie dollar, this juicy fat profit margin. So that's referring to this line here is the cost of production for our gold miners. So you can see, it's costing them say $3,000 and we're making $6,000. So they're just making juicy profit margins. From a price perspective, we're still in an uptrend. What I'd love to see is this. I'd love to see it consolidate for a while like this and then bang again. but we'll wait and see. It's definitely not the top while governments keep printing money. If we look at the same ratio, this is Aussie dollar gold over the ASX 300. You can see we've already broken out. If you had have switched all your VAS or your ASX into gold, Aussie dollar gold, you would have made 100% more. So this is the ratio story, and I can't see that bottoming either. Alright, so onto the tank. Who is he? Before we get into it, had some people who've gone through the conversion therapy. So Crystal here, I love getting my daily rooster fix. Go silver. Yes, if you don't know, it's my favourite metal. Maybe tonight's the night. Thank you for creating this amazing channel and community. I'm so grateful. Sold off my VAS VGS combo, and now my commodity portfolio is killing it. Very happy. So I'm very happy to have a happy converter. Alright, so what is MVR? It's basically, get that out of the way. All the big miners, I think there's 31 companies. So BHP's got nearly 8%, Woodside, Northern Star. So we'll go through them all, and the order we go in. So the later we get, so like Paladin only has 1%, which is where the ninja comes into the theory around whether you want to tilt for income or tilt for growth. But we'll get into that later. Okay, so this is MVR. Okay, so this is his long-term channel he's trying to get back into. He's had this declining wedge he's broken out of. This is the first target. It's the second target. Not like next week. I mean, this is a 10-year move, but he's going pretty quick to get there. This is when he officially became the tank, just here. So we'll go through some why I think he's better than everything else. Now, okay, so some ratios. Okay, so this is MVR over VAS. So the tank, he's outperforming VAS. MVR over VGS, he's outperforming VGS. MVR over the banks, Aussie banks or Aussie financials, the QFN. MVR over IVV, that's the S&P 500, slowly breaking out. Then MVR over the NASDAQ, so MVR versus the tech boys. So still trading sideways, but pretty good effort really. I mean, tech's pretty hot, so I expect that to continue up. And then another sort of popular all-in-one ETF as it gets sold, VDHG or DHHF, they're same, so outperforming. So that's the tank, he's doing his job. So if we go looking at the underlying stocks, so we first start with, this is the iron ore price. I don't expect it to do a gold. I just expect sideways trading. Copper. So copper's in a long term, look at that, it's beautiful. And beautiful mark. We've got a target on copper to up here over time. So it's just trying to break out of this squeezy pattern here. So why do we look at that? Because this fella BHP, so he's copper and iron ore, he's broken through the dome that's contained him. He's in this little wedge here. Declining wedges are bullish when broken, so you can see he's broken it. These are monthly candles we're looking at here. So he's just consolidating, sitting pretty, very nice. Oil. Okay, so the oil price is now forming a bit of a bottom, and we've got all these comments here anyway. So we're all in these declining wedges, and when they're broken, they're bullish. So if we just go to a weekly chart, so you can see we've had a bit of a 1, 2, 3 triple bottom there, big green weekly candle. There's the little declining wedge. This is the bigger one, and then this is the bigger one. So it looks like the bottom in oil is in. Natural gas. There's that little squeezy wedge. There's that little squeezy wedge here, breaking out, consolidating. Pretty bullish on natural gas because data centers aren't going to get electricity from solar or wind. They're going to need some other form of real power, and I reckon natural gas is probably what's going to happen there. But I won't dive into it too deeply. We got a show to run. Okay, so the next top holding. So BHP is the biggest. Woodside, the king. We'll go to a monthly candle so we can see the big picture. So Woodside been in this big declining channel, bullish when broken. So he had to go back here. Nah, he couldn't do it. So he's formed another declining channel here. He's broken it. So it's a break up, come back, retest, support, go. So we actually put out buy Woodside this week because what's his div? 6.9% div now. So again, all those divs come into the MVR ETF and divvied up. So Woodside looks great. Northern Star. So that's our biggest gold miner. Okay, so all the gold miners got a bit of a whack this week due to the gold price. But there's an example of that declining wedge break go. Sometimes they break and come back and test and go. But this one's it didn't. Anyway, he's held up pretty well above this resistance support line, so no issues there. Fortescue, so iron ore miner. So you can see he's down in the bottom of the range. They're cheap miners, so iron ore just has to stay where it is. They still make money. There's your declining wedge, declining channel, broke, come back, test. So Fortescue, ding, he's gone. Rio, so they're another BHP sort of iron ore, copper. I prefer BHP because they went out on a limb and borrowed a heap of money more than Rio to acquire copper assets. So I reckon that will do them well. But you can see they've broken the wedge. Okay, so rare earths, it's been big news. Trump, where they want our rare earths, Linus. So they're pretty much a global producer. So they're just looking fine, can come back to here. They're not going anywhere. Evolution. So they're a gold and copper miner. There's your declining wedge break. So they're fine. Origin. So they haven't even had a declining wedge. They're just going up, putting 4.9% div in there. Santos, so it's another Woodside-y type thing. I prefer Woodside over Santos. But anyway, he's doing fine. He'll chug away and add to it. He's got this forming this big squeeze here. You can see squeeze and then break to the upside. So he's still bottoming. Aluminium. And look at that pop your head up. He's off. Zinc, he's off. He's I think you probably should draw it like that. So he's gone through the squeeze and the break. He could still come back and retest, but right now he's off. Lead, a bit like a lead balloon. Anyway, he's got a bit of a channel there at the lows. Nickel. So nickel not doing very much either. It'll join the party later. So why do we look at them? Because this fella here, South 32, he's in all that business there. So you can see he's on his third touch of support here. Nice declining wedge. So I reckon he go. Oh, super. Oh yeah, I should yeah, so I'm also starting a new concept of, because in like Australians, there's some super funds like Australian Super, where you can buy ASX 300 shares. You can't buy MVR, so I've started a portfolio sort of made up from the stocks we're going through that you can buy in Australian Super. Like South 32 is one of them, that's why it says Super. Okay, on with it. Ready? Come on. Orica. So they blow up mines, not mines, they blow up land. So you can go digging. So anyway, they look fine. Ramelius, so gold producer, it's looking fine, just hovering above support there. Because remember those margins I was showing you before. Yes, they've run a lot, but their cash in the bank, cash flows through the roof. Lithium, so that's, I'll go to a weekly. So this is the lithium price. So you can see it's broken the downtrend channel up, just hovering around support. Yeah, look at this fella, Pilbara Minerals. So actually this is a good example of upward sloping channels, or whatever you want to call them, are bearish when they're broken, but downward sloping are bullish when they're broken. That's just how it works. So you can see Pilbara just sort of broke, came back, test, and now he's just, wow, it's time to put in a new level here. Again, he's another one in the Oz Super model portfolio. And anyone who set up, I know one subscriber set it up this week. He's got Woodside, Pilbara, he giddy up. Anyway, looks great. Worley, so they're global engineering, project management, sort of specialised copper, oil and gas. Lovely declining, broadening sort of wedge here, waiting to break. Ampol, there's your declining wedge, break, so he's off. Perseus, so another gold producer, Africa, it's fine, consolidating there. Coal, so coal's down in their base levels here, but they've broken the declining wedge, come back, tested support, pretty bullish on coal. Well, coal will be another important energy source, I think, especially our coal, because it's pure, it's not clean, it's not dirty. So in MVR we've got Whitehaven coal. I prefer New Hope, but you can't pick what's in the ETF. But anyway, he's got this long-term declining channel here. So he's done the hard work here. He broke test support. So he's looking fine. Mineral resources, they're sort of mining services with a bit of iron ore, a bit of lithium. There's your declining wedge, break, go, looks fine. Genesis, another gold miner, so he's looking fine. Capricorn, so another gold miner. Now as we get down here, we're getting less and less weighting, so if there's a more heavier weighting to the gold stocks, the MVR would look like different. It would look like some of the ninjas that if you don't know, you'll learn about, like pure gold miner ETFs or silver miner ETFs. Anyway, this is the tank. That's why he's sturdy in the core. Get on with it. Sandfire. So this is copper miner. So yeah, I mean, beautiful consolidation. That's what, after big runs, it's like you got to catch your breath. So you just want consolidations are nice. Horizon, again, it's broken through the downtrend, up, test, support, go. So they're like rail freight. So they haul all the minerals and stuff around the country, coal, iron ore, grain. So they'll be kept pretty busy. DNL, Dino Noble. So they're in that explosive game. So you can see here, just been consolidating, getting into this wedge, long-term wedge. So poking its head up. Very nice, very nice. Regis, so they're a gold producer. Bit of a different chart pattern to the rest of them. Anyway, he's heading for resistance. He's doing fine. Okay, Luca. So they're sort of in that. There's that declining wedge break. He didn't do a retest. So they're mineral sands. So again, that sort of rare earthy space. They're looking fine. Uranium. Again, there's your. It's what you call a cup with a high handle, a bit like that commodity chart. But anyway, so he's broken it and he's just testing support. So Paladin, that's our uranium miner. Another one in the Oz Super model portfolio. And he's a good buy there. He shouldn't be. He's right on support. That looks good. Monadelphous Mining Services. Again, they'll be kept busy. Beach. So oil and gas, like Woodside and Santos. That was another buy. Another buy this week. Where are we? I'll do that later. I need to put the buy arrow. Anyway, so Beach pays a nice div, 8%, right on support there. He'll be having his eye on go away, on this downtrend here to break through that. So there's upside in him. And we've got Liontown. So they're another lithium play. Broken the wedge, breaking out. So a bit of lithium going on at the moment. IGO, it's another lithium. Another lithium play. They've got some other things: nickel, copper, cobalt. Anyway, they're doing the hard work. They're popping their head up. So he looks good. And then round it off with DRR. So they're a royalty company. So they don't actually mine anything. They just take a clip of BHP's iron ore production. So they're really just there's 5.5% div, so it's not too shabby. All right, so that's all the kids, all the people that make up the tank. Now I'll go through how I reckon you should construct a portfolio around MVR. And I'll also leave a vid at the end of this about if you're interested in Australian Super, setting one up. And I'll be doing an updated vid on that Australian Super one on the weekend. Alright, let's go. Okay, putting the portfolio together by Rooster Productions. Okay, so how I see it is think of it, it's a war game. So the objective is to destroy the enemy who live in the castle, and they've got riches in the castle. So the first decision is what type of attack will I do. And that basically depends on, do I want the riches in the castle? So basically if you say yes, you want the riches, then you're saying you want high growth. If you don't want the riches, just means you want income with a bit of growth above inflation. Okay. Alright, so you decided you want the riches. So the plan of attack, you're going to need a tank to destroy the castle, and then some ninjas to go and steal the riches. Okay. Alright, so the tank is MVR, so he just sits in the background there and drops his bombs, throws his missiles into the castle. So he doesn't get his hands dirty really, but he does a good hard chunk of it. And then you're going to need some ninjas. So these ninjas do a dangerous job, obviously, because they're going into the castle. So there's two types of ninjas. There's ASX ninjas. So there's ETFs like XMET, which is a sort of, it's got a whole lot of copper, rare earths, lithium, silver miners in there. It's not bad. Uranium miners, your gold miners, your silver ETF, your copper miners, your small companies ETF, like a defense tech ETF, or any of your own growth ideas or shares that you might have. Then we've got some special US based ninjas. So these are, which you can't get on the ASX, so these guys do a bit more of a powerful job than the ASX ones. So we've got a rare earth ETF, a uranium ETF, but these are the large caps, these are the medium cap uranium miners. SilJ, which is your silver miners, you get a little bit of them in XMET. GDXJ, which is your mid-tier gold producers. Miners is your senior gold producers. So in a bull market, the mediums outpace the seniors. So that's why I say they've got special growth powers. And LitP, which is a lithium ETF. You get a bit of lithium in there, but you get more depth. So in here, for example, in XMET, you might get one or two companies in lithium, whereas in here you get about 30. Okay. Alright, so what percent of tank and ninjas should I use? Alright, well, so ultimate risk, like game on, I'll take anything. Alright, then you just go with no tank and just ninjas. Okay, you just go all in. So it can be done. I do have a subscriber who's done the just ninjas, and he in his first month he got a bit nervous because it dropped 10% in a week. Now he's laughing, but ninjas do a dangerous job. So if you're going to have ninja, you're going to expect, a week one of those ninjas could drop 10% in a week. Let's just set that. That's how dangerous the job is. But in a bull market, I expect them to come back like that sub did. He was in Remex, the rare earth one. Now he's up about 30 or 40%. Or you can go medium risk, okay, so that would be a 50-50 job, 50 tank, 50 ninjas. Or you can go low risk, but not low risk as in cash, but that would be just the tank. But I'm still, when you go the tank, I'm still expecting the tank to outperform VAS, VGS, IVV. So it's not, it's not low risk like in the bank. There's still volatility, but the tank isn't going to drop 10% in a week. Okay, so you've got to sort of work out your risk profile there. I don't want to be given personal advice around, what. The rooster, I'll get in trouble from the rooster. He's my compliance officer. All right, or you decided, okay, I don't want the riches. I've got enough money. I don't need to make 30-40% in a year. I'm just exaggerating, but these ninjas I expect to make it at least 10-20% per annum. A lot of them are up all that in 6 months. But it's, nothing's guaranteed. It's a dangerous job. You get reward for the risk you take. All right, so you're still going to need a tank to destroy the castle, because you've got to do some work. But you're going to need some drinking buddies. Just sit in the tank with you. So your drinking buddies are like your VHY, SYI, so dividend ETFs, ASX 300 div shares, or property trusts. Okay, so in this scenario, what percent of tank and drinking buddies? I'm thinking, like, if you're on ultimate income, then you go like 30% tank, because the tank's going to pay you a 4% div. So you can put that in the bank. And then say 70% drinking buddies, who'll pay you, I don't know, 6%. So that you still got you could just have drinking buddies, but they'll drink too much and they won't do any work. So the tanks, the growth performance of the tank will outperform the drinking buddies. Okay, because the tank's going to outperform VAS, and VAS is sort of the banks and your drinking buddies. Okay, so all right, or you want a good income but a bit of extra growth. So you set the bench, say 50% tank and 50% drinking buddies. All right, so that's just a framework. And each weekend I go through, do a video on the dividend shares and ETFs, and I do a video on all the ninjas. All right, hope you enjoyed that. Let us know your thoughts. See ya.